BTC USTD for traders, crypto market generally. I like to look into the structure starting from June 5. We made a drop at 59 level, price return 58 level, price return 57 level. The strategy is based on buy at the break of the previous low, sell at the break of the previous high. You know, so the price first of all created descending trend line. First here we had in the month of June Friday, and price return on June 25, giving us a descending trend line and reason to hold there as a critical demand floor on a descending trend line. And when price returned, it respected it. There is a very high probability that that remains a descending pattern. Remember on the weekly chart and the daily chart I sent, this floor is valid. It's emanating from the breakout from a bullish pennant. We had a bullish flag on daily time frame. If you go back, check. There's a breakout from a bullish flag. And after that breakout, price retested. And that descending trend line is what's carrying price. This price you see here is following a pattern. So now price has traveled a distance. A pullback into here will definitely edge the market around 56,385. You can set your buy order. Yeah, that makes sense. That makes sense to see market since the market lack liquidity and the market is playing around market structure. So look at what we've done here. Here 57. If we come here, we might drop by maybe extra 1,000 points and we see market reverse. And if you look critically here from your line chart perspective, you will see here as a resistance structure. Here's a support structure. Here's a support structure. After that pattern, that head and shoulder, break of a neckline, we've seen a sell. And price came back, broke that neckline, reinforced, used that broken neckline as a demand floor. You see what happened after break of structure. Price created chart pattern, came back, broke the neckline, used as a support, and you see price rallied. And 66,784 become a pivot a moment for buyers as they saw resistance at this level and they start to drop. And to bear witness into that pattern, price return here respected it, giving here psychological strength. Price return here on the same neckline that was broken before, respected one, respected twice, price return here, respected it, respected it, respected it, broke the structure, turned it to a supply roof. A broken demand floor becomes a supply roof. And you can see this is market story and it's not complex, it's not difficult. And I don't want to use grammars. I really forbid it in my strategy to make it as simple as possible. So now I've looked at the commitment of trade for BTC. There is net commercial short. The institutionals are shorting BTC. I don't know why. So if you're a commercial trader, if you're a retail trader, you have to be very careful because the commitment of trade shows that the commercials, the hedge funds are shorting, they are selling, and they are selling in order to accumulate. They are not just selling for a sale. They want to sell down, draw a pressure so that you rush into sales, a retail trader, they buy up, then go net long. So it's a strategy. It's a part of their hedge. So you see when price, played around and he came here after picking liquidity on the same floor. Now, technically, when we broke out from here, we retested and we came down. We respected this structure. We already have a daily structure that is playing on this pattern, on this descending trend line. And when we returned back, this was a final buy confirmation on that descending trend line. And we have moved up because of the liquidity we picked from here. We're able to break out the structure. What structure was broken? The history started from here, where price has formed a chart pattern, a head and shoulder chart pattern. This is the left shoulder, this is the right, this is the head, break of a neckline, bam, retest, bam, bearish drop. And we can see that from that level now price broke that structure, broke that supply roof, used it as a demand floor, and price came back again. This is a psychological point. Dear traders, this point is so vital and so important, so dearing to me to see what price does, and I will tell you it will do the same thing again. It will do the same. At least it might not be really something fantastic, but you will get a buy reaction here. If you are somebody who is doing a quick HFS trading, I can guarantee you will break even here because market will come here on a very strong rejection. Within 10-15 minutes, you click out and close the trade and go off your way. So when price returned here, it respected the same structure again. So I want to highlight it as a psychological demand floor. So the story makes sense. Even to me, it makes sense to me that that area market has presented it as an important area. After seeing what price did here, this is the history. This is the person that laid the foundation to everything that you are seeing here. The foundation was laid in June, and you see how it's running against each other. So when price from there it picked liquidity to come back to retest the high after a breakout from the neckline of this head and shoulder chart pattern, price came back here. Market will always do the same thing. Market sold where it sold before in the month of June. Market is calibrated. When you hear calibration in market, they already know where to sell and they know where to buy. And if we are crying about deep, market makers, those commercials, they know, hedge funds, they know where is the true next buy position. Only them know. But we'll continue to monitor the COT, and we're bringing COT strategy into structure with fundamental. That makes three things we're adding into the market. We're adding the COT data, we're adding fundamental from the US and the Federal Reserve, the dollar index, and at the same time, the structure of the market. So this gives us a very competitive edge in making a critical trade decision. So you see what happened. The market creates an ascending trend line. On the bottom here, we have here locked on 3 hours. I'm using 3 hours because of its alliance with the strategy. Then price came here and the three of them gave us an ascending trend line. Break out of that structure. This is a retest after break of structure. Break of that temporary ascending trend line. Price retested it to peak final liquidity on the floor. And when price broke it, it confirmed that this ascending trend line is valid. The validity of its ascending trend line or descending trend line has to be confirmed on intraday, 4 hours or 3 hours, has to confirm it on multiple times. There has to be interrelationship where at one point it becomes support, at one point it becomes resistance, but maintain an angle. And you see what price did here. When price came back here, it confirmed it again in the month of July. So giving us now 2 points to lock the strength of this trend. I needed this trend to be locked on a candle close, not on a wick. Wick cannot lock my trend line. Using wick to lock a trend line does not make any sense based on the strategy. So what I did was to first of all allow the two lock on 3 hours, and 3 hours have locked it on a candle close. So we go back to our chart. You see when price returned back in the month of July 17th, it respected it. It returned again, free giveaway trade in the month of July 20th. It respected it, and we came back there again on Friday, and we have broken that structure. The structure is broken. What structure was broken? An ascending trend line locked on 3 hours. We locked it on June 26th, and we locked it on July 13th. It is broken yesterday. You can see it. Price tested it. We bought and got pushed back. And by close of Friday, we already out of that. We're out of that trend. Why did we leave the trend? Somebody will ask. We left the trend because there is a pending order. If you look here, there is a resistance structure in the month of June 22. You lock it on 3 hours, and I will show you where it locked finally. So price came here, respected it, came here, respected it, came here, respected it. Then we broke out of structure and used it as what? As a support. Now I have locked the structure on 3 hours. What? I locked it because here we had a structure here and we had a structure here on line chart close. And to confirm it, when market broke it as a demand floor, it turned it as a supply roof, and we sold. And when we pick liquidity from the ascending trend line that has been running from since June, you see what happened there after picking that liquidity. Market broke that structure, used it as a demand floor. And you see yesterday bearish candle on Friday broke that structure. So technically, if price returns into 64, 400, 64, 367, I can tell you for free, you're going to face a bearish drop. You're facing a market love confluence. Now we have a descending trend line, another descending trend line, a black descending trend line meets an ascending trend line, double confluence, sell confirmation. But however, we need to see what market does. I want to see a push into 64, 64, 200, 64, 300. So what we'll do now is to go back to 15 minutes to begin to look for sell structure. Yes, so I'll begin to look for sell structure. From this zone now, I will go back to 15 minutes. I'm looking for sell structure in this zone on 15 minutes. And once I catch that sell structure, I want to make sure that it aligns with 64, 300, 64, 600, 64, 800. It could even come earlier because the market has already spilled the bean already. So at this case now, you want to see that market pulls out from this structure 63,810. 63,810 presents a strong support structure, that is SS. FAC's SS is support structure. So this support structure was locked on 3 hours as demand, SR, demand. And after we broke the structure, we retested it. And you see when price came back here, it now respected the structure. If we see momentum at 6381 that breaks and close the black descending trend line, it becomes an invalidation of sell bias. Price will return and align with the ascending trend line that has been buying. If we have that, that's an invalidation, then price will go back. That's what market is all about. It's validation and invalidation. So you get one. So if we see momentum, especially 3 hours momentum, break and close above this, and we see it sustain, then price returns into alignment. It returns into alignment because 63,810 pulled the price back. That is what it means. So we don't know the strength of that order at 63.8. That was why I said allow that 63.810 to be broken. That is the only hurdle we have. If you allow 63.810 to be broken, you have a chance to rip this market into 62. That makes a whole lot of sense. Over 2,000 pips secured from the patience. So trading is not about strategy, it's about patience. And I'll set my sell order, and I hope that price gets there. And if it gets there, and even if it doesn't get there, and I see a price breakout at 63.810, I look for sell opportunity, knowing well the hurdle has been cleared, because the next hurdle you will see in this market is around this area, 62,792. At that area, they might still pull price back. They will pull price back to go and retest 63,810. And from that level, you see an ultimate short, which will come down to align with the long-term descending trend line acting as dynamic support. And at that area, you see 60,000 holding firmly. And a break of 60,000 holding firmly returns price to a primary buying floor, which is here. So do have a good time. If you like this analysis, give me a thumbs up. If you have a divergent view, come into the comment section. Let me know your grievances. This is an open market. Bye bye.